The year is 2025. The world's financial capital wakes to a new day, but the energy on Wall Street is anything but routine. September brings a crispness to the air and a golden hue to Central Park, but on Wall Street, the heat is rising. The bull market, now in its sixth year, shows no signs of cooling. Investors, both seasoned and new, are swept up in a wave of optimism that seems unstoppable. The S&P 500 has soared past 6,600, and the Dow Jones has broken through 46,000, milestones that seemed impossible just a few years ago. These numbers aren't just statistics, they're symbols of a market that's rewriting the record books day after day. The Nasdaq, driven by the relentless march of technology, keeps setting new records. Artificial intelligence, cloud computing, and biotech breakthroughs fuel a sense of limitless possibility. Every headline seems to promise a future brighter than the last. But with these dizzying heights comes a sense of vertigo. Valuations are stretched to historic levels, with stocks trading at over 23 times expected earnings. Some analysts warn that the market's optimism may be outpacing reality. Seasoned investors who have seen cycles come and go caution that the easy money may already be made. They remind us that markets can turn as quickly as they rise and that euphoria often precedes a reckoning. Yet for now, the music is loud, the dancing is frantic, and no one wants to think about when the party might end. The atmosphere is electric, with celebrations erupting every time a new high is reached. Every new high brings cheers and whispers. Whispers of bubbles, of corrections, of lessons from the past that some fear are being forgotten in the rush for gains. Are we witnessing the dawn of a sustainable new plateau, or are we teetering at the peak before a steep descent? The market's path forward is as uncertain as ever, and the stakes have never felt higher. In this high-stakes environment, finding a reliable investment philosophy is more critical than ever. Investors pore over data, searching for signals amid the noise, trying to separate hype from substance. The challenge isn't just picking winners, but finding companies that can endure. It's about identifying businesses with real staying power, those that can weather storms and thrive in any climate. As euphoria builds, discipline and strategy become essential. The most successful investors know that patience and preparation are just as important as boldness. The question remains, which companies are truly built to last? In a market on fire, only those with solid foundations will stand tall when the smoke clears. In a market racing ahead, Warren Buffett's wisdom is a steadying force. Buffett built his fortune by buying wonderful companies at fair prices, not by chasing trends. His approach? Focus on businesses with durable advantages, strong management, and consistent earnings. It's about understanding what gives a company its edge, its economic moat. In a bull market, not all companies are created equal. Buffett's discipline separates the great from the merely good. Even when valuations are high, a fair price can still be found for quality. Avoid overpaying for hype. Focus on long-term value. This lens is perfect for examining today's market leaders. Let's analyze Alphabet, Meta, and Microsoft through this Buffett-inspired perspective. Alphabet, Google's parent, has joined the $3 trillion club, testament to its dominance and growth. Google Search and YouTube are so ingrained in daily life, they're almost utilities, creating a powerful economic moat. This cash-rich core funds bold bets in cloud computing, AI, and autonomous vehicles. Alphabet is no longer just an ad company. It's a multi-headed innovator. Its diversification ensures resilience, with new ventures maturing into growth engines. Alphabet exemplifies a wonderful company, dominant, innovative, and built for the future. Alphabet's ambitions are vast. Google Cloud is now a major player with a $16 billion backlog, proof of deep enterprise trust. Gemini AI has overtaken ChatGPT as the most downloaded app, showing Google's reach and integration power. Waymo, Alphabet's autonomous vehicle arm, is expanding into major cities, gathering unmatched real-world data. A partnership with Qualcomm will embed Gemini AI into vehicles, widening Alphabet's technological lead. Each of these, cloud, AI, Waymo, are core pillars, not side projects. Alphabet is building interconnected moats across transformative industries. This strategy positions it for durable, long-term growth. Even at a $3 trillion valuation, the case for Alphabet remains strong. Meta Platforms has transformed itself with a focus on efficiency. After skepticism over its metaverse spending, Meta shifted to profitability and discipline. The result? A 28% stock surge in 2025 and operating margins hitting 43%. Its ad platform, powered by AI, is more effective than ever. Ad prices and impressions are both rising. Advertisers are paying more, confident in Meta's reach and results. This dual-engine growth, higher prices and more impressions, shows a healthy, dominant platform. Meta's turnaround is clear. It's now a lean, profit-generating machine. Efficiency and innovation are driving its resurgence. Meta is once again a force to be reckoned with. Meta is expanding beyond ads, blurring software and hardware. Ray-Ban Meta smart glasses are a breakout hit, with sales tripling and plans for mass production. By building its own devices, Meta reduces reliance on Apple and Google, aiming to own the next computing interface. Its hardware push supports a vision of an immersive, merged digital-physical world. On the app front, Reels has challenged TikTok, keeping users and ad dollars within Meta's ecosystem. Threads, Meta's answer to X, quickly onboarded millions, cementing its place in text-based social media. Meta's playbook spot threats, build alternatives, and leverage its vast network. This strategy creates a powerful moat against competitors. Microsoft is an indispensable pillar of the global economy, posting $76.4 billion in quarterly revenue, a 17% jump. Its explosive growth is driven by cloud computing and AI, with Azure surging over 25% year over year. Demand is so high, Microsoft's growth is limited only by its own capacity. Operating margins near 45% show its pricing power and efficiency. Microsoft's integrated ecosystem, from Windows to Copilot AI, creates a sticky, comprehensive solution for businesses. Its products are deeply embedded in daily workflows, making it hard for customers to leave. Copilot AI strengthens this ecosystem, deepening Microsoft's moat. Microsoft's reinvention is powering its unstoppable momentum. Microsoft's capital spending is staggering, over $30 billion per quarter on global data centers. These sprawling facilities are the backbone of the digital world, powering everything from cloud computing to artificial intelligence. The scale of this investment is almost unimaginable, reflecting Microsoft's commitment to staying ahead in a fiercely competitive industry. Every quarter, billions flow into building, upgrading, and maintaining these high-tech hubs, ensuring the company's infrastructure remains state-of-the-art and ready for the future. A $17.4 billion deal for cutting-edge AI hardware keeps Microsoft at the forefront of the AI revolution. This isn't just about buying the latest chips. It's about securing the technology and talent needed to lead in artificial intelligence, machine learning, and automation. By investing heavily in next-generation hardware, Microsoft ensures its platforms and services are faster, smarter, and more capable than ever before. This massive investment is backed by a cash machine. Microsoft is on track for $90 billion in annual free cash flow. That's a staggering amount of money, giving the company unmatched financial flexibility. With this kind of cash generation, Microsoft can weather economic storms, fund ambitious projects, and reward shareholders, all while continuing to grow. This financial strength allows for aggressive expansion, bold research and development, strategic acquisitions, and generous shareholder returns. Microsoft can move quickly to seize new opportunities, invest in breakthrough technologies, and bring innovative products to market faster than most competitors. Microsoft's fortress-like balance sheet means it can outspend and outlast rivals. Its financial reserves act as a shield, protecting the company from market volatility and giving it the confidence to make long-term bets that others simply can't afford. It plays the long game, betting big on transformative technologies like AI and quantum computing. These investments may take years to fully mature, but Microsoft's patience and resources allow it to shape the future of technology on its own terms. LinkedIn, with over 1 billion users, adds valuable data and synergy to Microsoft's enterprise suite. The platform not only connects professionals worldwide, but also provides Microsoft with unique insights and integration opportunities across its cloud and productivity tools. Microsoft's moat is vast, a compounding machine built for the long haul. Its diverse business lines, powerful network effects, and relentless innovation create a protective barrier that few can breach, ensuring its dominance for years to come. For investors, Microsoft is the definition of a wonderful company, resilient, innovative, and built to deliver value decade after decade. In September 2025, with markets at record highs and headlines buzzing with speculation, it's easy to be swept up in the euphoria of soaring stocks or the fear of an imminent correction. Investors everywhere are asking, is this the top, or is there more room to run? The answer, as always, lies in looking beyond the noise and focusing on what truly matters. Warren Buffett's timeless wisdom reminds us, focus on the underlying business quality, not just the price tag. It's the strength of the company, its leadership, and its ability to adapt that ultimately drive long-term returns, not short-term market swings. Alphabet, Meta, and Microsoft aren't just riding the bull market. They're the ones driving innovation, shaping entire industries, and setting the pace for the digital economy. Their record profits, dominant market positions, and clear, forward-thinking growth strategies set them apart from the rest of the pack. These are companies with vision, scale, and the resources to execute. Alphabet has transformed into an AI-first powerhouse, investing heavily in artificial intelligence, cloud computing, and bold ventures that reach far beyond its search engine roots. Its willingness to innovate keeps it at the forefront of technology. Meta's relentless focus on efficiency and innovation has made it leaner and more formidable, not just in digital advertising but also in hardware, virtual reality, and the emerging metaverse. It's a company that's constantly reinventing itself. Microsoft's unmatched ecosystem, dominance in cloud computing, and fortress-like finances continue to fuel its relentless growth. Its ability to integrate software, hardware, and services gives it a unique edge in a competitive landscape. These companies aren't resting on their laurels. They're sprinting ahead, investing in the future, and setting new standards for what's possible in tech and business. For long-term investors, they offer a rare opportunity to own durable, visionary businesses that are built to last and thrive through cycles of change. In a world full of uncertainty and rapid transformation, Alphabet, Meta, and Microsoft remain some of the most compelling opportunities to own the future and to participate in the next chapter of global innovation.